Everyone keeps asking the same question. Should I wait until interest rates drop before buying a home in 2026? The truth is, high interest rates do not automatically mean you are priced out. In many cases, they actually create opportunities most buyers overlook. My name is Brian Marotta. I'm a real estate agent here in California, and I work with buyers who are trying to decide whether buying now makes sense or if waiting is the smarter move. So let's break this down clearly, without hype and without fear tactics. High interest rates do not stop the housing market. They change it. When rates are higher, fewer buyers are actively shopping. Homes tend to sit on the market longer. Sellers become more flexible on price, credits, and terms. And buyers gain more negotiation power. This is very different from what we saw during low-rate markets, where homes were selling fast, multiple offers were common, and buyers were forced to overpay just to compete. A lot of people say they are waiting for interest rates to drop before buying. The risk with that strategy is what happens when rates actually do come down. When rates drop, buyer demand usually spikes. More buyers enter the market at the same time. That often leads to multiple offers, higher prices, appraisal gaps, and more competition. So even if your interest rate is lower, the purchase price may be higher, which can cancel out the savings. This is why many smart buyers in 2026 are using a different approach. They focus on buying the home at today's price, negotiating seller credits or price reductions, and planning to refinance later when rates improve. Your interest rate can be changed in the future. Your purchase price cannot. Another common mistake buyers make is focusing only on the interest rate. Affordability is about more than just the rate. It includes the purchase price, your down payment, your credit score, the loan program you use, property taxes, insurance, and any HOA fees. I've seen buyers comfortably qualify and purchase homes in 2026 because prices stabilized, even though rates stayed higher than they were in the past. It's also important to know that first-time buyer options still exist. Many buyers are using low down payment programs, seller credits, and closing cost assistance to reduce the amount of cash needed up front. Buying in 2026 can make sense if you plan to stay in the home for at least 3 to 5 years, if you are buying within your budget, and if you are open to refinancing later when rates change. Buying may not make sense if you are stretching your finances too thin, do not have emergency savings, or are trying to time the market for short-term gains. There is no perfect time to buy a home. There is only the right strategy for your situation. High interest rates do not mean you should not buy. They mean you should buy smarter. If you're wondering whether buying a home in 2026 makes sense for you, I'm happy to help you run real numbers and create a clear plan. You can call or text me at 562-484-8138 or message me on Instagram at @Brian_Marotta. Even if you're 6 to 12 months away, having a plan now puts you far ahead.